This will replace the change of character. Now, if you're not sure what the change of character is, I'll briefly just go through that, and then we'll go through what the fractal structure and the fractal reversal is all about. So when we're looking at a change of character, typically we'll be looking at a, let's say, a bullish trend here, and eventually the market will make a reversal like this. And the change of character section is going to be where we see the break of structure to the upside, where we're taking out those weak highs. We're supposed to have these strong lows here in the market, and eventually we reverse the market, making a new strong high and a new weak low. That is the change of character in a nutshell. So the change of character is going to show you that structure reversal. Remember the difference here. It's a swing or internal structure reversal. We're talking about a fractal structure. Now what this means is we're fine-tuning where we can look to take a trade, understanding we can actually improve our risk to reward, but also remembering at the same time this can also be a much higher risk trade to take. But if you take it at the right time in the market, the right placement, it can give you some great risk to rewards. So let's just back that off quickly. And let's start off with a bearish fractal structure. Okay, so the idea of understanding the fractal structure is what we're going to do now, the theory behind it, and reading the candle by candle structure. This will help you to understand what fractal structure is. Later, we'll quickly briefly talk about the use of the fractal reversal and how you use that to look for those trade entries. Now, of course, if you want to learn more, okay, which means through this video, you want to learn more on the fractal structure and the fractal reversal, then don't forget, drop me a comment below this video and let me know you want to see more videos understanding how to use the fractal structure. So let's look at understanding how we read fractal structure. So what we're looking for is for the continuation of the previous candle's high or low to be taken. Okay, so in a bearish fractal structure, we'll be looking for the low to be taken. So it's not until we break through this low here in the market, we make a lower low. Okay, it doesn't have to be a close, it can just be a wick to the downside, as long as we see a lower low. We originally broke up here, leaving this low in the market. We then failed to break this high, which put us into a trading range from this high to this low. You can see how tight of a range this is with just 3 candlesticks. And then eventually we break to the downside here. We then failed to break this low once again, and we break to the upside. So we have a bullish pullback on a fractal structure, and we still then have a new, okay, this area here, this low becomes our new, okay, range high, and this becomes a range low, and we're either looking for the break to the upside or the break through back to downside. Everything in the middle we're not concerned about. We just want to see the fractal break to the upside or to the downside. We failed to break the high. We actually closed through the low and took out the fractal low. This then gives us a new fractal high here for trading range. Now we can't mark out this trading range until we see the fractal reversal area. And what this means is, let me just back off some of these lines. We see a continuation to downside, and again another continuation to the downside. Until we don't close through the low or wick through the low of this candlestick, then we can look to mark this off as a potential range. So as soon as we see this candlestick close, that we failed to break this low, we have a new trading range from this high to this low. And again, we're not worried about all this price action in the middle. We're looking for continuation to the upside or to the downside. You can see we failed to break this high once again. We close to downside, or we wick through to downside, whichever it is. We close down again, and we go to the downside once again. And see, we continue to be bearish here until we get that next candlestick which fails to close or wick through the low, which we do right here on this candle. We can then draw this previous fractal high to this low, okay, as our trading range. Once you understand that, anything inside here we don't care about until we see the move to the upside or the downside. So price basically closes on the very next candle to the downside, breaking the structure low, and continue with the bearish move. So let's back some of this off. And then what we have then, the next candle closes or wicks through to downside, but then the next candle fails to do that. So once we see this candlestick close, Again, we can mark this off as our range high, and this will be our range low. The next candle goes high once again, and then eventually here we break to the upside. This is what we class as our fractal, okay, reversal in the market. This area here. Now we don't have to wait for this close or wick through. In fact, we don't even have to wait for the close of that candle. You can watch this in live market conditions. What I mean by this, while this candle's still open, as soon as you wick through this previous high, okay, that indicates a potential reversal. And we can then start looking for an early entry with that market. Now, when we use this type of fractal structure with a fractal reversal, we're mainly going to be looking at it on a pullback against the trend or with entry with the trend. It's best used with entry with the trend, okay, understanding the use of multiple time frame analysis, swing internal structure, and combining it all together. Now, if you're not sure about the use of swing structure or internal structure and structure in general, then what I suggest you should do is sign up to my absolutely free Telegram channel right now, where I go through daily with my daily and 4-hour markups with the use of swing internal structures, supply and demand zones, to help you to see exactly how I'm looking at those markets on the EURUSD pair. Now, there's a link below in the description of this video on screen right now, so sign up to that, absolutely free. So back to this fractal structure, okay? So that's how we understand the use of a bearish fractal structure. We just want to see the continuation of price taking out the previous candle's low, okay? Until we don't take out that low, then potentially we can create a fractal reversal point in the market. So let's now take a look. We've gone through the bearish fractal structure. Let's now take a look at the bullish fractal structure. So on a bullish fractal structure, we're just looking for the opposite. Where we're looking for the continuation to the downside for that bearish structure, we're looking for the continuation to the upside. So here we can see that we have this previous candle's high. Okay, we failed to close through this high with this candlestick. And the very next candle, though, we do close up. This creates, okay, a potential reversal point, okay, or a previous range or an area for a range as soon as we see a fail again for continuation. So we can see we close up once again, we close up, or we wick through, should I say, above that previous candle's high, but this candle here fails to take out this candle's high. So once we see that, we can mark this off as a previous low, a high, we have our trading range. Again, we're not really bothered about what's happening inside here. We just want to see if we either go to the downside or back to the upside. So as you can see, the market does close back above, okay, and again, we break this high, and we close back to the upside. Then eventually here we failed to take out this candle's high. That gives us a new range from this low to this high. Now hopefully you've also seen previously, we don't have to create a pivot point, okay? This is not a pivot point for a fractal low. So understanding that will help you to understand how we read this candle by candle structure. We don't have to see like a pivot like this to create that reversal point. Okay, that's our fractal reversal level. So we can see we continue up. We fail to close up. This becomes our trading range. We then close down. So we have a bearish bias at that point, but it's a pullback within this range. Now, as soon as we fail to close down and you see the market closes back up, okay, we then continue up. We take out this high and this becomes your new fractal low. Now, again, you see we break up. We failed to break through this high on this bearish candle. As soon as we see this, we have a new range right here. Now, straight away on this point, we can see the market just goes straight back to the upside. We break the candle's high and we take out that range. So now we have a new range, okay, as soon as we have that fail of breakout. So this candle's high was failed to break out in the next candle. This becomes our range low to high. Now you can see how tight of a range this is and how you can actually find some high probability trades once you see this. So again, look, the market fails here to take up that high and eventually we do actually close higher here, but then the next candle we break through. Remember, everything in between the range we don't care about. All we want to see is a break to the upside or the downside. This break to the downside confirms a potential reversal in the market, and that's where our fractal, okay, reversal comes from. So once you understand that, it's going to help you to read those entries. And like I said, the fractal reversal is only really going to be used out of a multiple time frame area of supply and demand with the use of the different structures in the market. This is what's going to change that change of character. Forget the change of character. Fractal structure is the way forward. It's going to allow you to find and pinpoint those reversals in the market. So understanding the use of fractal structure will help you to identify that trading range. I'll go through this pound US dollar pair on a 4-hour time frame. We don't need to go far back in price to do this. We're just going to go from current price here on the chart for me to demonstrate to you the correct procedure when you're using a fractal structure. Now, everything in this video, okay, is going to be simply just showing you a potential short in the market, but we just reverse everything if we're looking for those longs. And of course, if you want to learn more, okay, on this type of fractal structure trading, make sure you drop a comment down below and you want to see more videos covering this type of trading. So let me just go through first understanding the structure in the market. So we're looking at where the market is going to break higher. Okay, so we've broken structure here to the upside. This leaves me this swing low when we broke the upside here. Then we're looking for the market to break lower. So we've broken up, okay, bullish market, and then we've broken back down the close of this candle. Yes, this single little candle, small body, is still a valid breaker structure. It broke and closed through this swing low. If it was just a wick like this, we were looking more at sweeps in the market, understanding it's a liquidity grab, and we could have seen a bullish move. And again, if you want to learn more on understanding liquidity, there's a full playlist in this channel. I'll also leave a link for that above now for you to check that out. So if we look at this as a break of structure, the market starts to pull back here. We would look at this swing high, okay? In fact, I got the wrong tool. This would be our strong high in the market. And this will become our weak low, where we're expecting markets want to pull back and run to. So understanding this is our swing structure on our trading range. Now, we can now also apply the fractal structure. Now, again, if you haven't watched the first video, you really need to watch that because you understand how to apply the fractal structure. So now looking at this movement in the market, my fractal reversal area was here. We then created this as a new fractal high, okay? And then we created this as a new fractal low. Again, you'll understand this more once you've gone through that first video. This then gives me a new trading range, okay? It's a fractal trading range. This is my swing structure trading range from this high to this low, and this is my fractal trading range. What does that mean? That means we can look for a pullback instead, okay, within this trading range. So we don't have to look for a full 50% pullback and mark it out for you for this movement, okay? You can look for a pullback within this range instead. And you can see, look, price never actually got to that level even, okay? So we never got to the premium area of this swing structure, but we did go into premium area on this fractal structure. How do you know when to use it? Well, what do we have here to the downside? We have a base drop area of supply, leaving over a nice area of imbalance, okay? Two nice imbalance candles. That means price is likely to come back into these imbalance zones, hold of the area, and push lower. Okay, if this wasn't here, then I would look at probably using the full swing, and I'll demonstrate that at this last area of price in a moment. But once we see this, we can look for price to pull back into the 50%, and I prefer to see price push through, okay, close through into the area above, okay, doesn't have to, okay, we did create a nice looking sweep here, but I'll demonstrate to you why, okay, briefly in this video. I wouldn't be looking for a trade, but understanding that this is our trading range from this high to low, okay, we'll get rid of this level now, we don't need it, and we don't need this high really either. So we know, in fact, let's get rid of all these lines, make this nice and clear for you. We know this is our trading range. As price pulls back up here, let me demonstrate to you. We have this level here. This is the last bullish imbalance, okay? Price comes back to it after we bounced off the 50% area. And look, we create a reversal. We held at that area and we went higher. We then create a new area of imbalance. Price held and we pushed higher again, creating a new area of imbalance, which held price here, and then eventually we closed through that bearish candle. So if you're just trading the candle by candle approach, you can see this bearish candle gave me a potential sell. Now this is all understanding the use of imbalances. And once again, yes, you're right. There's a full playlist in this channel that goes through the imbalances. I'll leave that linked above now if you want to check that out. And it will show you exactly how we look at using a candle by candle approach. Now we can also look at the fractal structure, okay, on a lower time frame, but this fractal structure means at this point we would expect price to either break this high, okay, of this fractal structure, or to break this low here on the low of the fractal structure. Now on this occasion we broke lower, okay, so our fractal structure range was from here to here. We pulled back. Once we pull back into above this area, into premium prices, we'll go down to a lower time frame to look for that entry to run for this low. Now, I'm going to demonstrate that right now, how I look for a trade. Go to 15 minute. And you can see here on the 15, okay, I already went through why I wouldn't be looking for a long-term trade on the lower time frames around this area because of the bullish imbalances we saw. But if you want to just have a quick look, you can see that the market, okay, we did push through on a 15 minute, but we only wicked through on a 4 hour. We can also identify, okay, we had a break of structure here to the upside, okay, then we broke lower here, and the market started to go lower until we finally broke lower and reversed structure again to the upside. Now, many will be looking at this price action and potentially be looking at this area here of supply, which is valid, okay, and you could look for a sell out of here, but you wouldn't obviously have made it back to this low, okay. But the idea is understanding this is a drop-based drop area of supply, which would have worked, okay, and you would look for smaller targets. That's fine. But what we're looking for is to go with the 4 hour time frame. And I like to see price pushing up through and above, okay, into this premium area on this fractal swing pullback. So this is a sort of price action that I would like to see, okay, where price is pushed through into that premium area. Now, once we're in here, there's a few things we can look at, okay. Some of you may use trend lines. So we have a trend line here, you can see, and price breaks through the trend line, pulls back, actually comes back towards that trend line, okay, and then we fall off towards the low. You can see the low is hit. Okay, yeah, this might be in hindsight, but it's good education for you to understand how to read these areas. So when we're inside this area, what we look for, we start to look for that structure. You can see the market here continues higher, okay, breaks structure. This is a sweep, okay, and I expect once these sweeps occur, see this low get run, and if it does, that's a potential shift in structure. We do. This is the main swing low we want to see broken, which is over here. Okay, that's a main structure shift. Now you can see how this happens at the same time as we break out of that trend line. So many people use trend lines for these types of reversals, which is absolutely fine. Now it's not the way I normally use myself, but what I want to show you is an early indication that the market is shifting. Then we'll go through where you could have taken entry, understanding everything put together. So we have here, let me show you, we have a break to the upside, okay, and this would then be my fractal low. Another break to the upside, and this would be my fractal low, and then we have this is a new fractal high. The market pulls back, this candle pushes through this low, gives me a new fractal high, and at this point it also gives me this area of supply. Now, supply and demand, if you're not sure about that, okay, there's a full playlist in this channel as well. It goes through every step you need to understand using supply and demand. And if you want to take that even further, I do suggest checking out the Profit Trade workshop. Okay, I will leave a link above for that now, and there's one in the description of this video. But we're looking for the market to pull back into this area, okay, and then you can look for the market to want to run this low. So let me just move this line, this low here. Okay, is in our week low. So you can see the market has shifted structure, okay, pulled back, and then we continue for this level. Now that's understanding the fractal reversal. That happens right here in the market, okay? Now, again, I hope you've been through and watched that first video. That would demonstrate much more about the fractal reversal. Okay, that shows you here the fractal reversal on this candle. price pulls back. Now you could even call an entry on this candle on a pullback if you wish. Okay, didn't have to look for this pullback, and the markets would have pushed lower, and potentially you've been looking for perhaps this low to be run, which it just about is. So that is the understanding of the fractal reversal, okay, or the fractal structure reversing when we see the market pulling back in this area. But if you want to be more on the cautious side, what we need to do, if we go back to that 4-hour time frame, let's go back to current price. Okay, what we need to look for here is where do we see the market reversing? We see it reversing on this candle. So mark that off. So we're inside this trading range. We've pulled back. Okay, what we're looking for is that reversal of this level here. Okay, it just about happens on that candle. I'd say probably for safety, we'd look for this candle to close down. So views then potentially you could say, right, we're going to sell. We've pulled back above the 50%. We're reversed. Okay, and that's understanding candle approach. This would be my entry for my target. And we're just about a 2-to-1 risk to reward. That the entry, yeah, it's just under 2-to-1 risk to reward. Okay, that's not a bad quick trade to take. Okay, it's putting profits into your bank. So understanding we reverse this bullish imbalance on the pullback within this fractal range. Now we use that understanding that this is a fractal range, not the swing range, and we look for that reversal out. Absolutely perfect entry to take, and it works. How can we increase that risk to reward? We wait for the close of that candle. We go down to 15-minute. This way you apply market structure and use your supply and demand. So here we can understand that the market is now bearish. Okay, with a nice bearish trend. Where's your last break of structure? Right here. Where's our last area of supply? What's the full zone is here. But I would then look at marking out, okay, this swing. Where is my swing? Okay, from this high to this low. Let's just double check, move this line. Okay, so it's actually deeper than I thought. So it actually goes down to here. I would actually bring my entry to this next bullish candle. That would be my entry. I understand it's above that 50%. That's where I want to be seeing my entries come in. So that would be my entry. This would then be my stop, my target in the same place. We've gone from a 2-to-1 risk to reward, okay, to a 5-to-1 risk to reward. And that is how you increase your risk to rewards. And that's how you get ahead of 99% of other traders, understanding the nature of fractal structure. So today we're going to look at how you can apply the use of the fractal structure when we're looking for our trade entries. We're going to use this with our higher time frame today of the 4-hour time frame of the pound US dollar. And then we'll most probably pop down to a 15 or 30-minute to look for that entry out. Okay, how we're going to use this with the trend. So we need to first identify, okay, the bias in the chart and the trend direction. Now the way we do this, we'll use market structure. Okay, so we're looking at general structure in the market here. And if you're not sure on how to apply your market structure, there is a full playlist in this channel. I will leave a link above now if you wish to go and watch that after this video. It's a great playlist for you to understand how you can apply market structure correctly. So what we need to look at is where do we see the market shifting? Well, first we can identify how the market is being bullish. Okay, we've been quite bullish to the upside, and then we've shifted back bearish. So we can see how the market has gone from a move to the upside, and eventually we've broken down. Now, obviously, we can see current price has gone back up quite strong, and we reverse structure once again. But what we need to understand is we're looking for those optimal areas to take a trade. Once I've identified this break of structure to the downside, we have a bearish bias. And then we have a pullback. We hold this area of imbalance. Now, in the previous video, you would have seen that we had here a fractal swing. The market came back in and continued lower. Now, what we're going to look at today is how we can look at taking entries on the lower time frames. We then have another continuation to downside. Now, using the full swing here, what we're going to do, we're going to mark out our area of supply. Now, if you want to learn supply and demand in more detail, there is a playlist again in this channel, which goes through about supply and demand. I'll leave that linked above now. But basically, we're looking to mark out our last area of supply. There's my area of supply that I'm going to mark. And you can see that the market breaks out, pulls back up into that supply. Now, what we're going to do once we have this, we apply the fractal structure not on this time frame, we apply it to the lower time frame when we're looking for entry out of the higher time frame area of supply and demand. Now, this type of trading is key to understanding how to pick up those high risk reward trades. Now, it may look like I'm just cherry picking here, but I'm actually just going through current price. And we'll perhaps look at this previous one we went through in the previous video as well, how you could use the same structure. But understanding, okay, once we see this pull back to our area of supply, this is when we're going to start looking at that continuation to that next week low in the market. So we zoom in here. You need to be able to understand how to mark up your structures correctly. You need to be able to understand how to mark up your supply and demand zones correctly. Okay, everything comes together with trading. Stop trying to get rich with trading. Get better and start going through the playlists in this channel to understand the concepts correctly. So once we see price pulling back here, we can identify, okay, ahead of time, we can see price has come back down, broken structure once again, okay, and then since reversed and we went higher. So this point in time, we never broke lower. So then you can see the market from here has broken structure to the upside. And since then, we continue to move higher quite strongly. Let's look at this area we can find a trade. I'm going to show you how you can easily increase your risk to reward. If you're taking what we call a set and forget strategy entry, and this is all within the playlist within the channel, we then look for price to target that low. And we've got a 1.85 risk to reward there. Not the best risk to reward. Whenever you're trading, you want to have at least a 2-to-1 risk to reward to be in your favor. So when we see price coming back into this area, what we're going to do now instead is go down to the lower time frames. Let's go to a 30-minute. So let's find that area. Okay, so we can see where price has come to this low and shifted back to the upside. Now, understanding our fractal structure here, and again, if you haven't seen that first video in this playlist, this is where you really need to go back, watch it, understand the concept of how we apply it. I will quickly go through now, marking up that fractal structure from this low, going to this high, where we can start looking for trades. So our last break to downside was this wick here to downside. Now, when we're using a fractal structure, we don't care about the close of the candle. We just want to see that wick through, okay, even in live conditions. At this point, my last high is going to be here. We break through here to the upside, we pull back, and our fractal continues to push higher. We have a new fractal low here. We then continue to push higher, a new fractal low, continue higher. We then have a new fractal low. And then finally, we have another push through here, and we have a new fractal low. Now, at this point, we can see we have a fractal reversal. So let me just remove all this off. Let me go through now with a line. So you can identify here, and let's change that to a dashed line. Right, so we can see that the market wicks through to this high. After this point, we create a new fractal high here. We push through again to the upside, and then we have another fractal high we push through. We have another fractal high that we push through, and we have another fractal high here that eventually we've pushed through. Now at this last swing high, okay, we can mark off our fractal low. This is our fractal low, which in fact becomes my reversal point. So right here, we reverse the market. Now if I zoom into this area, you'll see that when we see this reversal, this is where you start looking to mark up your area of supply. Okay, and you'll be looking for an entry out of that supply to then look to target, okay, this 4-hour low. Now, there's one thing I want you to look at this chart. Perhaps just take a moment to look at this chart. Leave a comment below and tell me if you got it right straight away, why this is not a great time to take a trade. Yes, we'll come up, we'll pull back nicely. We've seen the fractal reversal, but there's something that goes against this trade. Now, if you've seen what it is already and you get this right, just let me know down below that you got it right. Okay, the reason we wouldn't take this trade is because we haven't yet come into supply. We need to see price come into that supply to pick up those orders. Now, the 4-hour supply that I've got marked here. So at this point, let's say that you didn't see that and you've taken a trade out of this area based on that candle. You've taken a losing trade. Okay, so you've got a minus. Let me just mark this out. We've got a -1. In fact, let me just do this with, let's just grab a text. Okay, let's make this as a -2%. Okay, saying we're risking 2% per trade, and we've got a -2%. Let's just put that up here. Right, so we've got a -2% on that trade. You didn't realize that it hadn't gone into supply. You pulled the trigger and you had a losing trade. You know, you're looking for the market to run to that low. Now your risk to reward, okay, compared to we saw on the 4-hour entry, look, we've got a nearly 12-to-1 risk to reward there. So yeah, you're going to look to take these trades because your risk to reward is so much higher. Now, unfortunately, this trade didn't work out. We had a -2. Now after this, we can identify quite quickly. Let me just mark this off this low. And let's grab this. We have another break of fractal structure to the upside. This then becomes my fractal low again. And you can see that the market again straight away reverses. But this time we push up into the supply. There's your difference, okay? When you look at that as a setup and you look at this as a setup, you need to be patient, okay? Stop trying to get rich with trading. Get better, become patient, use fractal structure, use supply and demand, use market structure, everything I teach in this channel. Okay, and again, if you want to take it further, there is that Profit Trade workshop all about supply and demand. Okay, and then there's a trading coaching experience if you want to take it even more further than that. So when we see this fractal structure reversal, once again, we can mark up our area of supply. There's our area of supply. And again, we look for our entry. Stop at the high, plus a few pips, looking to run the low. And we've then got a trade around about 8.5. Okay. So what we've then got now is, if I just double this up, clone it. So over here, we've now got a winning trade. We've gone from having a losing trade of -2% if you've taken this trade to the next trade setup you've taken. We've now got basically a 17. So we've got a plus 17%. Why? Because if we've got a 2% trade here, we risked, okay, we -2 in the first trade. This trade, 2%, that's going to be 16 plus the half, 17%. So overall, you've made a 15% profit just by taking this one trade for this 4-hour direction. You've gone with the 4-hour. You've got to go with the higher time frames first. Make sure you go in line with the higher time frames. Then we're looking for this fractal reversal. Entry, okay, target. That is how you can start to make these high risk to reward trades. Now, 15%, that's you done for the month. Okay, so you don't need to be looking for those high profits, looking to get rich with trading. Just get better, make sure you understand the concepts, take your time, become patient, and things will become better for you. So I'm on the weekly time frame here of the pound US dollar. Now the whole concept is around the use of market structure with supply and demand, but it's also using what we call the fractal structure. And I'll show you how this works in a moment. So on this chart, you can see we've got the weekly time frame with some red and blue candles. Now they are just representing areas of imbalances. And if you want to learn more on imbalances, I do suggest watching the full playlist in this channel after you've gone through this video. Okay, we'll go through and explain how you can use these imbalance candles for optimal areas to look for trade entries and potential targets. Now, you'll see in this video how we can use this imbalance on this last push up, okay, as an area to look for a potential reversal out of. I'll go through that right now. So understanding first the fractal structure. Now the fractal structure is a key way of looking at the market. Now, if you're not sure on how you mark this up, as I go through the chart now, don't worry, because the first video I linked at the beginning of this video will go through exactly how to use this fractal structure. So the fractal structure, we can see where the market is shifting down and we have a new high here. Then this high gets reversed right here. Just about, let me just double check that for you. Let's mark that high off. Yeah, we get reversed right there. So the fractal structure at this point then continues to push up here. Reverse structure there. And from that point, we have another small reversal. We continue down, reversing right here, and eventually reversing again up here. So this is quickly showing you how I look at the chart to mark up my fractal structure. If we're looking at a swing structure, looking at actual market structure here, and again, market structure, if you don't understand how to use it, how to mark it up, how we follow market structure, there are a couple of playlists in this channel I suggest looking at. First is the market structure playlist, goes through exactly how I mark it up, how we look at it. And then there's also the new playlist that goes through marking up different pairs to show you how simple it is to use the 3-line strategy. So we can identify this becomes our low. This is classed as our weak low. We're looking for price to want to run this low based on our swing structure, and this would be our strong high. This is where we have our drop to downside breaking structure low here, okay, and markets pull back in. Now you can see that we've shifted bullish here. So how would we indicate that the market wasn't going to run for this low after this push down? We use that fractal structure. Now if you remember, I did say that we had this high was our last fractal structure area. And basically this is after we broke this low right here, a fractal break to downside. After this, the shift then is here. We have a new fractal low here in the market that the market never even comes to. And eventually we have another break, okay, to the upside here once again, which breaks that high. Now that is our fractal high. Now in this instant, what we're looking at is we can look for the market to target this high, this fractal high. So we can identify we've shifted here back bullish with a fractal structure inside this larger swing, okay, this trading range here. We're now pulling back to the upside, going against the range itself. This break potential area here is our target. So after we see this break to the upside, we have an area we can mark out, which is right here, an area of imbalance. This is that imbalance I was suggesting at the beginning of this video. Now, if you don't remember what I said, go back, watch it again so you can see what I mean. Prices pull back to this area of imbalance where we look for price to run for this high. So the idea here is once we've seen this reversal, we know we can look for potential buys, okay, after we start to see the pullback to run for this swing high and potentially even take out this high. But how we're going to use this is we'll be looking for lower time frame entry. So we're only looking for this high to be run. This is then our weak high inside this fractal movement. And this understanding the structure is key when it comes to market structure, fractal structure with that supply and demand aspect. Now you'll see how the supply and demand comes into this as we go down to the lower time frame. So what we're going to do now, we're going to pop over to the next time frame of choice, which is the 4 hours. So what we're using here is multiple time frame analysis, and we're looking to take our entries on the lower time frame. So we're going now with the fractal structure. Even though it's against this swing structure on the weekly, we can still look to trade the fractal structure on the lower time frame here of a 4 hour. So we go in, this is where we see the market reversing. And then we have, this is our low, which the market would have to break, okay? Understand the structure on the fractal on the weekly. And this is the area we can look to target. So when we see the market breaking through here, all we have to do is follow price. Now we can look for short-term entries as well. As price starts to break up, we have a break of structure here. And this leaves an area here of demand. And let's mark it up. You can see the market comes back into the demand. And we can get an entry out of this area to run this high. We then create a new area of demand here in the market. The market pulls back and we expect price to want to run this high. So even after this break on this reversal, we can still look to continue to buy with that bullish trend here on a 4 hour. Okay, this isn't the entry I want to go through today, but the idea of the concept is demand is in control. Okay, so following this fractal structure on a weekly is going to help you with your areas on a 4 hour. So as the market continues to push higher, once again, there's our next run. Mark that out. And what do we have? As the market pushes up here, we have another area of demand, but we come back into. At the same time, we have a sweep in the market. Now, this is a different type of method entry, but it is an entry method out of an area of tested demand. We run through again this high, but this time you can see the demand created would have failed, and we have a break to the downside. Now, this is where you can start to understand on that higher time frame, price is now pulling back against the weekly to come back to that area of imbalance. So as the market pulls back to that imbalance, which we'll just go through in a moment, I'll place this back on the chart. We have a continuation of bearish price action. Let me just now go back to that weekly, and let me just place this on the 4-hour as well. So there is our imbalance on the weekly. Do you see how the market has gone broken out of that structure here on the fractal? We pulled up and we start to pull back into this area of imbalance. It's understanding not just supply and demand. You need to have the concepts of everything else. Supply and demand is the foundation for your trading. So once they see price coming into this area, for a reversal out, we have to see price now run this high. Okay, this now becomes our reversal point, okay, on the 4-hour. But we're inside this area of imbalance. Is there an easier way can we look for an entry? Well, we apply again that fractal structure. Remember, this is what this video is all about. This concept of using our fractal structure. And our reversal point on the fractal structure is going to be right here. So when we see this wick through, that's a reversal and a potential long we can look to take. And we have an area of demand. So we have an area of demand that we could draw where the markets come back into once before we push through this high. That means I'd expect this low to be swept for an entry. There is our sweep, close back up above. Now you can either wait for this big bullish candle, or you could take an entry of the break of the high. So what I'm suggesting is you can look to take an entry after you see the sweep, okay, or you can even look to take an entry if you wish at this level down here. But I suggest to wait for this candle, then look for a breakout if you want to use this style of trading. Now our target, would be this level. Okay, so we've got an 8-to-1 risk to reward there. Not a bad risk to reward, and if you're holding on for this high, you've got an 18-to-1 risk to reward. That's understanding, okay, reading the structure on all aspects, not just our swing structure, our fractal structure, our imbalances, our sweeps in the market, okay, and all that. But this video is more about the fractal structure, and obviously if you want to learn about all the other things separately, there is a playlist you can learn on everything. But let's now look at what happens here. We then have the market pulling back, we sweep through this low, and then we push through the high once again. Now, all we're looking at here is early reversal indication on this level. This is what it's for, an early reversal indication. Once we then make this sweep, you could wait for the break of the high, that candle, or you could wait for this candle to close. Or we have another option. Now, I said at the beginning of this video, watch it to the end. I'm going to show you how you can increase that risk to reward. This is understanding reading price. If we just now go down to lower time frames, when we see this sweep happening on a 5-minute, we're going to start to apply the same concepts. So at this point in the market, we have seen the reversal. We've seen the sweep on a 4-hour. And we come down to this area. Where is my last breakout? This is the last breakout of that structure point there in the market. Now my fractal reversal, my main swing structure, shall I say, at this point probably going to be around here. And my fractal reversal would be here. Let's mark that out. In fact, we get rid of this now. I'm going to mark this out as our fractal area. That's our new fractal structure break. Now at this point, we can start to look for areas of demand as the market's making its move. There's a new demand zone. Okay, there's another new demand zone. You can see the market is very bullish. We continue to push up. As we break through the structure now, we create this new demand zone. Now, why is this valid? This is a valid demand because we have another small break of structure. Just mark that out again. There. So we have a break of structure and again, another break of structure. So this demand zone is a valid area to take a buy. And because we're going with the high time frame, we're seeing the 4-hour coming up for that sweep. This is an ideal entry for a set and forget entry with that area. And where would our take profit be? Take profit would be around here. Place. So now we've got for this swing high a 23-to-1 risk to reward, okay, on that trade to this swing high. And if you're looking for this swing high, which we obviously the weekly one we're looking for, and let me just go back into price. Let's make sure we got some room below the trade. You got a 72-to-1 risk to reward. So let me go back to the 4-hour. The first target we're looking at there. And we're looking at this. Okay, this is the weekly pullback. Whereas that 72-to-1 risk to reward. And this is the 4-hour swing high for the break. And that's where we're looking at that potential first target. You always want to take partials in the trade. But that is how you can go from a 7-to-1 risk to reward to nearly a 70 risk to reward. If you can hold on to those trades, this is how you can create massive profits in the markets. Now remember, trading, there always comes risk and you can always lose in the market as well. But this is the way you use supply and demand concept with the fractal structure. Now in a moment, we're going to go through this US dollar Japanese yen from a 4-hour time frame, and we're only going to look at current price just here in the market. We're not going back in time. We're just going to look at current price and look at where you could be capturing a trade right now from entry here to target to this 4-hour week low. I'm going to demonstrate how you can use market structure, use supply and demand, and use imbalances combined with the fractal structure to pinpoint an entry for a much higher risk to reward. So let's now go through by marking up our structures first. So when we look at marking up our chart, we want to be looking at using 2 time frames. Anytime we're using this strategy, look at using 2 time frames. So we're going to use the 4-hour time frame as our setup time frame, and we're going to use the 15-minute time frame as our entry time frame here. So marking out our market structure, if you're not sure about using market structure, there is a full playlist in this channel, goes through all the steps to apply market structure correctly. I will leave a link above now for that playlist for you to go and watch after this video. But we'll start from this area. We have a break of structure to the downside. Here to downside. Puts us in a bearish bias. We then continue to break lower here with another structure break to downside. And finally, we have another pullback. And we mark this out as our next swing low. So this is our current week low, where we are expecting prices to want to run this low. Now, potentially, I've got to see price want to first run through this level here in the market, which is an area of imbalance. Now, you'll learn more imbalances as we go through this video, as I show you how you can use it in combination with the fractal structure. But there is a full playlist in this channel. If you want to learn more detail on imbalances, there's a full playlist that goes through all the different concepts you can apply with using imbalances. I will leave that linked above now for you to go and check it out if you wish as well. So you understand this is our structure, our swing structure on the 4-hour to downside. Now we're going to look at the last move here. We're not even going to go back in time. We're going to look at the current price. So you can see exactly how to look to apply this in the current price in the market today. First, we look at marking out our area of supply. So this is my last buy candle right here in the market. Our last buy to sell move, I mark out as my area of supply. Now we'll mark this out on the lower time frame as well. In fact, let me just mark everything out on the current time frame first, and then we'll mark this out on the lower time frame. So this is key to understand. This is where we see the continuation of the bearish move at the moment on this time frame. Prices come back to tag that area of supply. Now we also have here an area of imbalance. This is where we have some leftover orders within this candle to the downside where there's been only selling pressure in the market. We pull back in, reverse this bullish imbalance, and we push to fill this imbalance next. So the key is to understand how to read not just this fractal structure in this video, but also to understand your supply and demand zones, your imbalances, and marking of your market structure. We also have liquidity, but again, if you want to learn any of those subjects, check out the homepage of this channel. You'll find everything you need to understand within there. So when we look at this, let's just mark this off as well. In fact, we don't need to know. We know we're inside this area on the 15-minute as well. Okay, so what we do now, we go down to a 15-minute price chart to look at what happens when price comes back into this area. This is the key part you need to understand. When we're using this 2-time-frame strategy, we're going to look at this for our potential pullback to an area to sell from. This is our point of interest, but we want to find a sell out of. Now we go down to our 15-minute. So this is using our supply and demand strategy. So we can identify here where the market makes this swing low, okay, reversing structure to the upside. We then continue to push through. Okay, let me just show you this actually with a level. So we break this level here. We then break through here to the upside. And again, we would just continue to mark out these structures where we see a break. And eventually we get to this area, we break out again. And then we break up this final push up. So we have a bullish bias on the way up here with the pullback to that area on the 4-hour supply and the 4-hour imbalance. So we then have this as our final swing high there. We're reversing structure. So there's a few ways we can look at taking a trade. I'm going to show you how you can just take a normal set and forget entry, reversal, confirmation entry out of this higher time frame. Now, some may also call it the change of character. So what we're looking for is a reason to look to sell to target this 4-hour low out of this area of supply and the 4-hour imbalance. That's why it's key to understanding all these concepts. When we see this break to downside, that's our shift in structure. And there's a new area of supply that I can draw here on the 15-minute. And we'll be looking to take an entry here off the retest of that 15-minute supply, stop at the high, and you'll be looking to target the low. So just over 4-to-1 risk to reward taking that trade. If we were to see the price head to continue down until we run this low, you've got a 4-to-1 risk to reward winning trade. That's a simple strategy of understanding supply and demand reversal out of a higher time frame. A two-step strategy. But how can we increase that risk to reward? Applying a fractal structure. But what we're going to look at, and we'll remove this now, is when price comes down here, we have a fractal reversal level, a fractal structure break to the upside here. We then break again to the upside once again, and this leaves me this fractal low. And this is where we have what we call a fractal reversal. So when I see, and we'll zoom in here now for you. So when we see this candle pushing through, okay, this is where I see a fractal reversal. I can mark off the last buy to sell move of supply. And you guessed it, this is where you can start to look to pinpoint accuracy your entry using a fractal structure strategy. Combine it with supply and demand, imbalances, and market structure. Yeah, everything you need is within this channel to learn all these concepts. But if you want to take any of this further, there is also the trading coaching experience, and you'll find there's a link below in the description of this video and one popping up now for you to check that out. Now, this will give you all the tools you need and a community to help you grow and be held accountable. So looking at this fractal reversal, we can pinpoint a new entry right here in the market with a smaller risk. Now, when I'm doing this, I'll be looking to target this low first because it's the 15-minute, okay, low. This is our structure on a 15-minute. This is a reversal out of a 15-minute area of supply. We saw this 15-minute reversal out of a 4-hour. So you can still take these trades, but your risk to reward will not be as high. So you can look for just over a 1-to-1 risk to reward on that first target. And then we go from a 4-to-1 risk to reward to over 11-to-1 risk to reward on that trade. That is how you can use the fractal structure strategy that I'm sharing today and apply that to your trading combined with everything else we're now going through. This one thing, this one concept of using fractal structure with everything else will turn your trading around. I really do hope you're still at this point watching this video, understanding the concept. Now, if you are, okay, and it's creating that light bulb moment for you like it did for me, I'd like you to put in the comments below one word, and that is light bulb. Okay, so we all know what it means. We all know why you've put it in there, because you've got to this point in the video. You are going to be one of those 1%ers who've got to this point and understand why this concept will work. So that is how we can use everything together. Okay, we can use the supply and demand, the imbalances, the market structure. And remember, there's a playlist. I said throughout this video, there is a playlist on each of those subjects in this channel. And then we have the fractal structure, and we haven't even touched on liquidity and understanding market sweeps. Now, again, look, we're going to look at current price, the move heads downside. The last area we see the push down, okay, run the low. We're already in a bearish trend, okay, on this market. We're going to look at the last potential entry you could have taken using this type of fractal structure and this strategy. You really need to understand what you're missing when you're not applying this to the markets. First, let's go through this movement down. We'll mark up our structures, and then we'll go down to lower time frames, and we'll start reading that structure again with the fractal structure, the swing structure, okay, our internal structure. And if you want to learn more on structures, don't forget there's a full playlist in this channel which goes through the market structure playlist. I'll leave that above for you to go through and check it out after this video. So let's now look at where we see a break of structure. So we can mark this off as our break of structure to downside. So we have a nice break to downside. Okay, this means this is my current high. That's my strong high. We're not expecting price to run back through this high. Then when we start seeing the pullback, okay, this is my current week low. Now we can obviously see since then the market's pushed through, okay, and it's created a new strong high here in the market. And this is our current week low. Now what this means is within these movements, we have what we class our trading range. So we have our trading range, okay, from this high to this low. Okay, that's our current trading range on this move, and this is our current trading range on this move here to downside. And we're looking to see price as we pull back into that trading range and looking for entry. Now, as well as those trading ranges there you can see with the swing structure, we can also apply, we went through in a previous video in this playlist, understanding the structure of that fractal structure of a trading range. So our fractal structure is where we see the market pushing down. This is our current low. Our last breakup, okay, with a fractal structure, we broke this low here of fractal structure, and then we broke this low. That means the last fractal high is this one. So we can mark this out as a potential fractal high. This is our fractal low. This means our structure then goes from being this as our, okay, swing move to, we actually use an arrow instead, to this. So we've gone from this full swing here to this smaller swing. So what we're looking for is price to pull back inside this area. Now we look at where price is going to come back into. Well, we could mark out this area of imbalance. This is an ideal area we expect price to pull back into for another move to downside. Now, if you're not sure on how we use imbalances, there is a full playlist in this channel. I'll leave it linked above now. Make sure you go and watch it. Every single video is going to help you to understand how we use imbalances. And it's also going to show you what these candlesticks, these red and blue candles, and why they're colored. So at this point, we identify that the market's pulling back against the trading range of this fractal structure and this swing structure. As the market pulls back up, we can see we've got smaller moves, say sideways, push up, and we want to see the market come back into this area of imbalance. And we also have here, okay, our last small area of supply. Okay, that's our drop area supply. And what we're looking for here is a reason to take a sell, where the market comes back into those areas to look to reverse that market. So if we mark our and leave that area of imbalance once again. Okay, and as the market comes back up in one test, pull back, and we go higher. So we can read the candlesticks. We're inside this trading range, okay, to the upside. What we're going to look for here, and we'll remove this level, and we'll remove this for now. We're looking for a reversal out, okay, to target this low. So what we use is the lower time frames that we've been through in a previous video. We'll start looking for that structure and for reason to take a trade. Now, as long as we don't push through this high, okay, there's no reason to worry about any reversals. Now, this would be also my last era of supply. And if you want to learn more on supply and demand, don't worry, you can go through a playlist in this channel, okay, shows you everything about supply and demand. I'll leave that linked above right now as well. So when we see this market pushing away from this area, okay, this area of supply has gone deeper on 3 occasions, and then we push out once again for this area of supply. Okay, we could even mark this of this full move. We retest it here, and like we had, this area was marked as well. We can mark this out, but price never comes back to that. We don't have to come back to supply, not if we see these areas of imbalance holding price. So that is how we mark up that 4-hour time frame. Okay, we're not actually going to do is when price comes back in here for the first time, we're going to see how you can actually have a losing trade with this process as well. Not every strategy is going to give you a 100% win rate, and this is no different. Okay, we can have losing trades. Let's pop down to the 15-minute. So now we understand where we can see price coming back to. Now, if we look to the left, when we see price pulling back here, let's look to the left. Where are we coming into? Do we have a swing high right there? Okay, so we're pushing through a swing high. Then we push higher, and then we're looking for that reversal out. So when we see the market pushing up here, what we're looking for is the last breakout, which is this high. And then this becomes my fractal reversal. So as we break down here, we can start marking out an area of supply. So we have an area of supply here. Market comes back, pulls back into, retests, and we were looking for the market. And we always want to look for, okay, your first profit target. You want to be looking to get out of the trade risk-free as quickly as possible. So there's a first target hit. Okay, so the market, and in fact, we may even had a first reversal here as well. We had a break here to the upside, and that would leave, let me just believe, would have been this low here as a fractal reversal. And once again, we'd have another area of supply. Okay, so you can see this one, we didn't quite come back into that supply, and we ran through it. So there is a losing trade. Okay, so we have a losing trade here, and then this trade, we've hit our first target and we'll be risk-free. The market actually starts to, and we can mark this off, that we start to internally break structure and continue to go lower. And then we reverse back up. And then you can see the market continues up. So we had a losing trade here trying to take that entry. Now what we need to double check is based on our structures, we're looking for where that 50% area is. There's our 50%. We're inside premium based on this structure. Now if we base it on the full swing structure, okay, where's our 50%? So our 50%, and let me just mark that up across. There is our premium, okay, and there's our discount for this pullback. So if you was looking to take this trade here, you have to say to yourself, you're either going to be taking a trade based on this swing pullback of the fractal structure, or you're going to take it off the full swing pullback. When they fall together, it's much better. But on this occasion, you can see we've got space to get to this area of premium. So yes, we had a losing trade and a winning trade, but if you ignored the fact that we hadn't yet got to this premium, the 50% area, then wait for price to get here. And this is where you can actually start to improve your trading. Don't blindly jump in as soon as you see a reversal using this strategy. Wait until you get to a location that you want to take a trade from. So if you've actually waited until this point, we apply the same thing again. We can see we have the continuation higher to this high. Okay, so we have a break here. Let me just show you what we get. We get a break to the upside here. Market continues up, breaks up, breaks up, breaks up. This one just broke up. Now this may have been a false signal. Okay, we wick through, and you could have looked at this as a potential reversal area of supply, and we push back through. So again, we could have a losing trade. I wanted to demonstrate you will have losing trades with this. The next time we push up again here, we have this as our reversal point, and we have a new area of supply. So never walk away from your first entry. And you can see the market never comes back to remove that supply. So this is now your entry. Okay, so we can mark this out. That's our entry. Stop above that high. You've been triggered into the trade. Where's your target? Well, your first target on this one would have to be this low. Take some profit off the trade. Okay, you've got just over 1-to-1 there. And your second is going to be running for this low. Same would have been if you was taking a trade here. This would be your target based on that 4 hour. So you've got over a 10-to-1 risk to reward. Can you see the power of understanding the use of fractal structure? 99% of you are not using this, and you're missing out on this potential type of trading. Waiting for this pullback above into this area of premium, okay, based on the swing structure, would have given you one loss, okay, and a winning trade. Now, if you watched the 4-hour time frame candles as well, you may have waited until you saw this reversal, this peak based on a candlestick pattern on a 4-hour. But let's say you've taken this losing trade, you risked 2% on a sell. So you have got basically a minus 2%. That isn't a great minus, is it? Minus 2%. Okay, so you've got a minus 2% loss on that trade. Then let's say you've taken this trade, you've got a plus 10% plus the 1-to-1 you've taken, that's plus 11. So you've got plus 11% profit on this trade. So that's a 9%, and we can use this as our 9% overall profit. Now, if you didn't take this first profit target and you decided to just let the trade run for the low, you would actually have then basically 20%. So you'd have a nearly 21% risk to reward. Minus that, it's a 19%. So you can see how you can grow your account much faster if you're not taking those first profit targets. But it will affect your emotions in trading, and it's important to look to take off some profits early on so you can be risk-free and more comfortable in your trading. So this is the power, okay, of using fractal structure. And if you want to take fractal structure even further, understanding how to apply it to all time frames, especially those entry time frames I've just gone through here, the new Novice to Pro Mastermind, which is in development, has already got 4 modules released to my members within the trading coaching experience, which will have access to those modules to help you to understand to reprice like this and start trading like a pro. Now, if you want to check out the trading coaching experience, there'll be a link below in the description of this video, and there'll be one popping up at the end of this video.